You get more out of it, and you're here, you pay your money, so you get your money's worth. So don't worry about who's not here, we only worry about who's here. Okay. Woohoo! Couple of things for today's lecture. We'll just see how we go with the time, how far we get. Tacked on to sort of the end of it, there's a little bit more on the intergroup transactions, but I'll just highlight now because I'm pretty open about what's in the exam, and you've got the exam information sheet anyway. The emphasis on the consolidation question is on the other stuff. It's about the acquisition analysis and doing the journal entries for that, the business combination valuation reserve, and there may be one or two tiny little intergroup transactions, but the emphasis is not on intergroup transactions, but you still need to know how to do it. So I'm going to do a little bit of it, because especially for those students that are going to do the CPA program, you need to know how to do it. But you can relax a little bit in terms of that for the exam, but just know some of the more, there might, I can't remember if it's in there or not, there might be one or two more basic ones, but there will definitely not be a question like you bought inventory, you've sold it internally, you've got a third left and there's a 40 or 50% markup. There won't be like a question like that. All right, but let's have a look at our revision for, now your exam is the 19th, that's the Wednesday, or the, yes, is it the Wednesday? Yeah. I think that's the Wednesday of the second week. Now, the start time is 1 o'clock and it's around here. So within this lecture theatre, either this room, 001 or 002, so you'll probably be in one or the other, or they might spread you around, but there's only about, what is it? 35 left, about 35 students, so they might be able to fit them all in the one room, keep one and then maybe do something. I'm not sure what they're going to do. You know that it's out of 50, all right? So my exam consultation, now I only put up official consultation. We're only required to do 4 hours during our study week, right? So I've got 4 hours. I'll pretty much be here all day on the Wednesday. Right, so but from, so that's sort of like 10 till 5 kind of thing, so I've got 4 hours there. Now you know you can email me anytime. If you email me and you want me to call you back, just leave your phone number and I can give you a call back, that's fine as well. If you need to, Baban has actually got some consultation as well, so during study week and week 1, I think. But, you know, if I get enough demand, I will be you know, coming in periodically, so if you need to desperately see me face to face, maybe we can organise something. So you're allowed to ask, but if we can do it by email or phone, that's suitable too. And you know I'm pretty good, so I'm pretty good with getting back to people, especially around exam time and that. I won't leave people waiting, but you know, if you do it the day before the exam, right, don't necessarily, you know, especially like at midnight, the day before, you know, you get what you get. If I'm available, you might get a response if you're lucky. If, but maybe not. That you run that fine line yourself. So best to try to, if you're doing 4 units during study week, you know, map out your study. If there's anything clear, because you know exactly what you have to do in my unit, because I've told you exactly what to do. If there's anything very specific in there, you know I'm going to be there at that time, come and see me. Even though another exam might take a priority because it's earlier, you know, it might be in the first week or something like that. But if you know that, then I'm there. What I'll do as well is Baban's consultation times as well, so I'll pop them up on a blackboard under his name, so for his exam consult. Can't remember, I know he's got stuff on maybe the 10th or the 11th or something like that as well. Okay, so you can see there will be somebody there. Now, you know that the final exam has been up for a few weeks now on Blackboard. You are allowed to take in 1 page of notes. Writing both sides can be handwritten or typed. I always recommend that where you can handwrite, use your own handwriting, because what that does is that facilitates learning as a part of that process of writing it out, right? So, but it may well be that you write it all out and then maybe you sort of type it up and neaten it out, but you should have written it out at least once. I would anyway. There are a couple of things though, when we get to cash flow, for example, those things you might like to cut and paste and stick in a corner, shrink it to size so that you can fit it on there. Please don't come in with sticky notes on it. If you've got sticky notes, make them flat and photocopy it so that it's all flat. If you've got sticky notes, they're all coming off. All right, so don't do that one. Okay, the other thing with the exam is the invigilators are a little bit different because it's all run fairly independently. I'll be here when you come in, hopefully to help you settle nerves and things like that, because some people are a little bit worse than others when it comes to exams. But you know that you just take a few deep breaths, but you are allowed to write during the 10-minute reading time. But for me, I don't care where you write, but for the invigilators, it's run independently. They only allow you to write in the margins on the exam paper. You're not allowed to write in the exam booklet. All right, so just make sure you're mindful of that. Sometimes it's good to take a few minutes to settle the nerves, flick through the paper, pick a nice, easy one. That's your best approach to any exam. The first question you attempt, always pick the one that's nice and easy. Right, you've got 3 questions, you've got a choice between consolidation journal entries. For you, that could be the easy one. Or alternatively, you've got a disclosure question, right, which might be to prepare a balance sheet, a profit and loss, or statement of equity, or combination thereof. Right, you might think that that's the easiest question, right, so you do that one. And then you've got your statement of cash flows. I certainly don't recommend that you do that one first, right? Only because you lose track of time. It's a long question, requires quite a bit of reading, and then when you start, if you get engrossed in it, boom, all of a sudden you look up, hour and a half is gone. You've got 2 hours and 10 minutes, so you need to allocate your time according to the marks allocation. 25 marks, half the exam, 1 hour, all right? So, and then the equivalent for your corporate disclosure and your consolidation. All right, so remember that I also do consequential marking. So consequential marking means even if you've got parts wrong, all right, you will get marks as you're going through. You'll only lose marks for the bits that you've done wrong. But your answer, especially with the cash flow, I've said this a few times now, don't just put the cash flow balancing at the bottom to the balance sheet. Because you know there's cash at bank, it's 100 grand, it's got to be 100,000 at the bottom, put that in there. You're not going to get marked right if yours does not add up to that. And I'll know straight away because I'm marking it, and if your figures don't add up, right, so what you do, make sure your figures add up appropriately, put the answer in, even though you know it's wrong and it might be out, you could put the 100,000 next to it and say, I couldn't quite get it to balance 100,000, it needs to be this, it's out by 1,000. If you get a chance to come back to it, go for it, try and find out what it is. So when you're reconciling, you always look for the exact amount. If it's out by $1,000, look for the $1,000, check your T accounts for that amount. Maybe you got something on the wrong side, maybe if you got a discount, maybe you forgot a return, something like that, or a bad debt. You know, usually it's something in the operating activities, all right, usually. And just check that you've got your pluses and minuses right, okay, as you're going down the list. If you can't find the exact dollar amount, halve it. So if it's $1,000, look for 500. That might show you whether you've got it on the wrong side, or double it, all right. If you can't find it, don't lose any sleep over it. Just go back and make sure that you tick off the bits that you do know, because other sections of cash flow, you've got your investing and financing activities, there's marks allocated to those, you can tick those off. Maybe you've just made a few mistakes, but you know, it is still possible, even if you get part of it wrong, to still get maybe 18 or 19 out of 25, all right? And don't stress, move on to the next bit. All right, so you've got, make sure that you watch the time allocation as well. Okay. There are no multiple choice questions. Now, if anybody if you're sick, if you're genuinely sick, just go to the doctor, get a medical certificate for the day, right? Don't go and sit any other exam either, all right, because that looks a bit dodgy, right? And because students have done that, right? And because it's all looked at essentially, they know, all right? So just go to the doctor, get your medical certificate, and then sit the deferred. Now, the deferred is controlled centrally. It's not controlled by me, so don't necessarily just send it to me. If you did send it to me, I'll just make sure it goes on to the right people. But you need to follow the instructions and load it up through your ACES and put your application in to do your deferred exam. So the deferred exams, at the moment, I run between the 15th of July and the 26th of July. All right, so other excuses like you've got to go to a wedding and things like that, it's usually not acceptable. But you can't argue with a medical certificate, right? So I had one student came to the exam last semester. So he was sick, as he was, he literally vomiting in the toilet, and it's like, why come? Because he thought, oh no, I've got to try. And it becomes difficult when someone has come and they're not feeling well right from the beginning, and then they come and look at the paper and then they go and vomit in the toilet and then walk away kind of thing. It kind of becomes a little bit difficult because it's not like he all of a sudden got sick. He was actually sick in the beginning. But if you're sick, please don't spread your germs to your fellow students because they're your friends and they need to be healthy and well for doing their test. So that's the other thing during exam time. People, and coming into winter, especially now, people are getting colds and flus and stuff like that. So lots of vitamin C. Stay away from people that are sick so that you don't have to worry about it. And the other thing, bit of an exam sort of trick as well, is have something a little bit sweet, right? So your exam's not at a bad time. It's at a pretty good time at 1 o'clock. You've had time to, your brain's had time to kick in. It's a pretty good time. So you haven't been hanging around all day, so it's not a nighttime one where you'd be a bit lethargic in that. And it's not a first thing in the morning one because it takes my brain about 2 or 3 hours to get going. So I'm sure there's people like me. So 1 o'clock, perfect timing. Hopefully you don't have multiple exams on the same day. If you have too many, remember you do have rights. You are allowed to put in an application for a deferred if you've got too many exams at the one time. But I think they do have a policy, as they do allow 2, right? But you must have a reasonable break between them. So if you had one in the morning and in the evening, that's acceptable because you've had a bit of a break. If you've only got like a half an hour break between them or something like that, then that's probably not fair. So you have grounds to put in an application for a deferral, but you should have already done that because the timetable's already been out for a while. All right, but remember, if you're sick, and that's fine. Don't go to the exam. Get your medical certificate. Okay, that's your cover sheet. You know you've got 2 hours and 10 minutes. You're allowed to have notes, writing both sides. You're allowed any calculator, but do the right thing. Make sure your memory is cleared, and make sure you follow the instructions of the exam invigilators because they are strict. So make sure. That most of you have been here for a while, you know the drill. Don't forget your student ID card, right? If you do and you live too far away, perhaps you need to take your driver's licence down to student services quickly and get a new student ID card. You might have to pay a few dollars. Has anyone done that? I don't know how much it costs, if it's 5 or 10, was it $25? All right. So hopefully you don't have to do that. You might want to make a suggestion that there is a way for you to print off like a temporary card for exam purposes, because I don't think they do that here. So you can jump onto your OASIS, print off a temporary exam card, bring it in, and they can validate it with your photo and your driver's licence or something like that. So, just for emergency purposes. I'm surprised they haven't brought something like that in. Because, in a group of 1,000 students, chances of it happening to, 4 or 5 people, because you're rushing out the house, you maybe leave your bag in your car and you're stressing out kind of thing. But, even being able to log into your phone and have it pop up on your phone, something like that as an identifier, because we're using our phones and that for everything. So that's might be a worthwhile suggestion. Now, but at the moment we don't have that, so you've got to have your card. So therefore you must have your credit card in your pocket and hopefully, or a spare $25 just in case. All right, and have a little bit of sugar, right? Have a little bit of sugar before the exam, unless you're a diabetic, don't. You've got a medical condition, but it's always good. So real sugar, you know, bit of orange juice, apple juice is probably the best thing to get your brain working fairly quickly. Okay, so we know we've got 3 questions, so one of those is worth quite a few marks, worth 25 marks, all right, which is 50% of the exam and 25 marks towards your final grade. Your presentation of a cash flow, so you'll be required to use the direct method. You need to clearly know the difference between operating, investing and financing activities, showing the inflow and the outflow, money coming in, money going out. Right, so make sure you just take your time when you're preparing it and you're thinking about your bank account the whole time. If something doesn't hit your bank account, it's not cash. All right, so that's just a quick, easy reference. But then we got to work out the cash by looking at some other items from time to time. So the easiest way to prepare it for me is using those T accounts, recreating those T accounts. Take your time when you're recreating those T accounts, making sure you get the opening and closing balances on the right side of your little T account. Right, so when you've got an asset account, the opening balance is obviously going to be on the debit side, the closing balance on the credit. Make sure you've got that right, you've practiced it enough so that it's second nature, so it's not really something that you have to remember. So essentially what we're doing when you're preparing a cash flow is you're starting off with your balance sheet. There's a movement in your balance sheet and you've got your profit and loss, right? So your profit and loss represents cash and non-cash. So with accounts receivable, you haven't got the money yet, right? But for some of that, we have got the money. So this is why the two of them interrelate. If you don't want to do the T accounts, you can use the formula. The risk of using the formula is when you have multiple amounts, you could forget some items. You could forget to adjust for bad debts. All right, you could forget to adjust for discounts, for example. Whereas if you recreate your T accounts, you know that you've got to recreate your accounts receivable, for example, opening, closing balance, pop in your sales. Are there any bad debts written off? You might need to recreate your provision, your allowance, for your doubtful debts. Work out that movement, have a look at the doubtful debts in the P&L statement, see what the movements are in that, and then see what's been written off. All right, and then account for that in your T account for your accounts receivable. Right, so visually it's there. When you do the formula, sometimes you forget that. All right, so it's entirely up to you which method you choose, and you may choose to have your notes and use both. So you may choose to have some examples of T accounts and what's in them, or you may choose to have what you think might be the maximum that you would require to work out your cash receipts from customers. So it always starts off with a P&L amount, so for your receipts from customers, always sales. Right, and then you adjust for your movement, whether it's an increase or a decrease in your accounts receivable. You adjust for your bad debts and your provisions and any discounts and that within the formula. So you can write out the whole formula yourself. But the thing that I always forget is do you add or you minus an increase or a decrease when you're doing that formula? All right. So that's what in the heat of the moment in the exam when you're a little bit stressed out. So T accounts, you generally can't get them wrong, right, if you practice them, and they're nice and quick and easy. Let's have a look. The other thing to check for with the balance sheet is working out your cash and cash equivalents. Always check for an overdraft as well. All right, there could be an overdraft. So you could have a cash amount and you could have an overdraft as well. Some companies operate both. And remember that the overdraft gets minused out. Okay, hopefully you know what your general purpose of your cash flow is. It's exactly what it is when you're looking at it. It's looking at your operating, investing and financing activities, looking at your core business through operating activities. Where's your money coming from? What are you spending it on? how's it coming in? So, and it's at a point in time. A little bit different to a budget. A budget is better at showing you surpluses and deficits over shorter periods of time, right? But your cash flow statement is your general purpose financial statement, which shows that. Clearly shows your investing and financing activities as well. So you're financing, where do you get your money from to run your business? Have you issued shares? Have you got debentures? Do you have bank loans? Things like that. You're investing, what assets have you got? Have you sold any assets? Have you bought any new assets? All right, and as an investor, when you're looking at things like that, it's always good to see companies investing in assets, because it means that they feel that their business is going well, that they can buy more, and that those new assets are going to help them generate more money into the future, because that's the whole point, right? Otherwise, why buy them if they're not going to help you continue to be, to generate money into the future? Okay, so your limitations of your cash flows, it doesn't tell you everything. Right, your cash flow statement only tells you at a set point in time, and you can't. It's not really a crystal ball. What it does is gives you an indication. All right, and it gives you an indication if you've got problems. So this is the little one that I was saying that you might like to shrink down. All right, to a smaller size. So crop it and cut it, shrink it to a size, because that pretty much lays out the majority of the different items that you could get into cash flow. So it highlights under your operating, you've got your receipts from customers, your suppliers and employees. To give you a cash generated from operations, we must show your interest paid and income taxes paid separately. All right, so that aligns with your requirement of AASB 101 for your profit and loss. Remember, within your profit and loss, you must show your interest and your income taxes separately. You must do the same in the cash flow. Right, you must do that, particularly for your interest. It's looking at how well are you negotiating monies that you're borrowing, and it looks at companies that are paying higher rates of interest for similar type activities and similar amounts of money are higher risk. All right, and you can look at that by looking at the amount of interest paid. Income taxes as well, must show all that separately. When you're investing activities, you've got purchasing investments. So when you're purchasing an investment, it's a payment, money going out. All right, so it's a negative amount. So we've got brackets there. All right, your financing activities. All right, don't forget you've got some dividends paid and that down there as well. So don't get to the end and forget that you might need to recreate your retained earnings account, which has got your opening and closing balance. You've got to pop your profit in there, see what the differences are, have any dividends been paid. So remember, there are two types of dividends. There's an interim dividend, a final dividend. The interim dividend usually gets paid in that time period, and then you have that final dividend from the previous year that would be paid as well. The final dividend the current year usually gets paid in the following period. Okay, so getting down to the end, this is the bit down here that I don't want you to just pop the figure in, all right? That's what reconciles to your balance sheet, cash and cash equivalents. Don't just pop the figure in, all right? Make sure it adds up properly. Then you may only lose like a small amount of marks, right, for the bits that you've got wrong. Right. So that's our cash flow. All right, so you need to know how to do that. That's using the direct method. Any questions on that? Okay, the only thing...
So just to clarify, if we don't, if with the cash and cash equivalents at the end, is it right, put both?
You can put both. Yeah. What you have to do, the one thing you must do is just put your answer there. So even if you don't put it next to it saying it should be 100,000, I'm out, whatever, I know that. But you just need to make sure that it adds up. But if you put that little note there, I know you've tried, but I know you've tried anyway, because you're not sitting there doing nothing in the exam. All right, so as long as it adds up, all right, then that's fine. But if you just put the answer, you're not getting anything for that. All right, so... Okay, the next bit you have to do is your note, because this is what the standard requires. The standard requires you to, when you're using the direct method, you must reconcile and prepare the note. All right, so the only way, again, to do this is to practice. You start with your profit, and remember, this is the note reconciling your operating activities. So if you're starting off with your profit figure, remember your profit includes non-operating activities as well. So essentially what you have to do is make sure you adjust accordingly for those. So where it's recognised revenue, you need to minus them out. Where it's recognised an expense, you need to add it back, all right, to make sure it's only about operating activities. So you start off with your profit, then you need to add back any non-cash expenses, so any depreciation or amortisation, things like that. You add or minus your non-operating items, depending on whether it's a loss. So the losses, so notice those losses have been added back. Your interest revenue has been taken out. Then your movement in your assets and liabilities that relate to operating activities. So that's generally your current assets and current liabilities. There could be the odd non-current item in there, depending on what's actually in your profit and loss. All right. So we've got accounts receivable, inventories, prepayments, accounts payable, salaries, for example, and other expenses. All right. And then you need to make sure that it reconciles back. So by doing this as well, that's an extra check for you, and it might actually highlight why your operating activities may not balance. All right, it might actually highlight something that you could have missed. All right, that you might be able to go back and have a look. So it's a good little check for you as well to see whether your operating activities is correct. And if it reconciles and there's something else, then go back to your investing in your financing activities and see if there's something in there that you maybe put your opening and closing balance on the wrong side of your T account, something like that. Maybe when you've gone through and you've ticked off your balance sheet, you actually might have missed a whole account, right? Because remember, in the additional information, it doesn't always tell you all the activities. You still have to check the balance sheet, make sure that you've checked off all the different items to see what the movements are. You might have missed a purchase of some, plant and fittings or something. If you're out by $1,000, there could be a movement in there, and you go, oh, that's it, that's investing, pop that in. We didn't tick that off. And that's why if you use a highlighter pen as you're going through and you know that you've put the amounts in a T account, you've reconciled to see if there's a cash component, that highlighter, it'll show up straight away if it's not highlighted. All right. So those are good for exams. So make sure you practice that. And if you go back to the actual questions, you can see your statement of cash flows, 19 and 6. It's pretty obvious what the mark allocation is. 19 for your statement of cash flow, 6 for the note. Pretty obvious, right? It doesn't require a rocket scientist to figure that one out. Okay, now any other questions on cash flow? Okay, so as I said before, if you've desperately gone through everything and you want to maybe practice another, I think I might have one or two more hanging around, so email me, and if I get enough requests I'll pop it up on Blackboard, but I have to go looking for it. I've usually got a few spare ones around somewhere. All right, now for your next question on corporate disclosure, it's all about AASB 101. Now those of you who put in a big effort in your assignment, you'll be pretty familiar with AASB 101, all right, in terms of what the minimum line items are, what the requirements are. Now, your general purpose financial reports, your P&L, your balance sheet and your statement of changes in equity. So with the mark allocation, there's 10 marks allocated to that. You might have to prepare one or more of those financial statements. So you need to make sure that if it's a profit and loss, remember the minimum requirement there with your P&L is you must show your interest and your tax separately, right? You can't group them together. You must show your key revenue and key expenses. And when you're doing your expenses, you can present them by function or by nature. All right, so in the event that you do it by function, means you group it together, you usually have a little note to say how you've grouped it all together. Right, if it's by nature, remember it's each different item separated out. Your balance sheet. So there's some minimum requirements for your balance sheet. There's two major ones. Number one, you must differentiate between current and non-current. Number two, you must show in order of liquidity. All right, so those are the minimum requirements. There are other sort of requirements that go into it. A lot of those can be open though, because the standard is a little bit open as to how you present it. And as far as the assignment goes, this is where everybody, quite a lot of people, not everybody, there's a couple of groups that got it right, but quite a few didn't adjust their balance sheet and their profit and loss accordingly. Mainly the balance sheet, where they, even though in the labs I'd gone through the report and shown you how to move your line items so that your depreciation, everything lined up correctly, some people didn't do it. All right, so some people grouped it all together and netted everything off, so it was fine. It was just a one-liner, but most people just printed out the financial statement and forgot to divide it. You know, if it was computers, less depreciation, plant and equipment, less depreciation, forget to do that. So you need to make sure in the exam that you get that bit right, because it's in accordance with AASB 101. Now, the other thing with AASB 101, it usually requires the current year and a previous year, right? I won't give you 2 lots to do, all right? You just have 1 lot to do. Statement of changes in equity, so that's showing your movement in your retained earnings. So you've got the different columns, so you need to make sure that you have a look and practice that. Okay, so these are the basic things that you can look at with your general features. There's no particular theory questions attached to anything. It's all pretty practical, all right? But remember, understanding the theory for AASB 101 is going to help you do the practical, all right? So that's not really part of it, but this is stuff. This is the bread and butter of financial accountants, making sure that you comply with all these different features, making sure that the information is relevant and reliable, addresses materiality, all that kind of stuff. So when you're in business, let's have a look. So we've got our balance sheet, as I said. We've got new must show, difference between current and non-current, order of liquidity. There are lots of other sub-classifications, but there is a bit of openness to that. There is one other thing. If you've got inventory, you must show the breakup between your raw materials, work in progress and finished goods. You can do that on the face. Better to be in a note though. All right. There's a lot of things that wherever you shrink it, you should have a note. All right, so wherever you've got multiple items that add up to property, plant and equipment, for example, if it all lines up, you should have a note saying what makes up the amounts. All right, so these are, I'm not going to go through all of them, so those are some of the minimum line items. So really what it means is each line item you have must be separate and distinct. All right, so there's a logic to it. You don't add things together that are not similar. If they're different, then, you know, what it means, for example, if you've got multiple prepayments, you can put them in a one-liner, right? So let's say you've got 2 of them, put them in one line, have a little note to show you what makes up your prepayments, right? Things that are different, it's best not to group them all together. And that applies to your balance sheet and your profit and loss. However, having said that, the P&L is a little bit more open because you can have, like for example, other expenses. So you could have 10, but the reason that you can group it together is because they're not material, right? Items that are material should be shown separately, all right? So out in the real world, anything that's material, all right, needs to be shown separately, either on the face or on the note, in the note, all right? But it is possible to group unlike items together in your P&L, but as far as the balance sheet goes, you really shouldn't be putting things that are not similar, of a similar nature together. And what that means, it makes it easy for you, all right, when you're preparing it. And there are, like from an exam point of view and a marking point of view, there isn't necessarily one right answer. There could be multiple answers because the standard does allow a little bit of choice, all right, what you put in the face, what you put in the notes. As long as you're very clear about it, just decide how you're going to do it and how you're going to put it together, and that's fine. So there's just an example of your balance sheet, making sure you divide between your current and non-current. Notice how we've got our cash and cash equivalents all together. We've grouped receivables, but we do have some other items there as well. Okay, your non-current assets, you must show your property, plant and equipment. You know, you can't group your property, plant and equipment with a reserve, for example. Right, so, or with intangible type assets. Okay, with your liabilities, again, you'll see that the types of line items, even though there are items grouped together, they are of a similar nature. All right, so your profit and loss and your other comprehensive income. So your P&L is pretty basic, revenue minus your expenses, but then there are potentially some elements of other comprehensive income. So we haven't done a lot in this unit in terms of other comprehensive income, but things like foreign exchange gains and losses in relation to asset revaluation reserves and things like that, things which are a little bit outside your normal business operating activities will go into your other comprehensive income. The thing with the accounting standard is that with other comprehensive income, you must show the tax attached to that separately. All right, so if it's pertinent. Okay, now there's a few, I've kept it simple, there's a few other things attached to the other comprehensive income in terms of companies, but we don't need to go into that. All right, so as I said before, your minimum line item requirements there with your P&L, you must show your finance cost and your tax separate. All right, then you've got your other core groups of revenue and different expenditure groups. All right. Okay. As I said before, with your P&L, with your expenses, you can classify by nature or by function. All right. When you're doing it by function, it does have limitations in that they are arbitrary, potentially arbitrary allocations. All right. So there's a basic income statement, just as a reminder. Here's a statement of equity. All right, have a look at that figure 511, 5.12 of your equity. Here's one for Qantas, but go back to your book. This one's a bit too convoluted, but we know we have opening and closing balances for your retained earnings, any reserves, if there's a general reserve, your profits for the year, payments for dividends, things like that. All right, so go and have a look at those ones. Okay, any questions about disclosure? Right, hopefully you're full bottle on that. All right, so remember that emphasis there is on disclosure and taking the time to neatly present either a profit and loss, a balance sheet or a statement of equity or a combination thereof, all right, with the data that you're given. Okay, lucky last, worth 15 marks is your consolidations. So consolidations is focusing on AASB 10. So looking at companies. Now remember, in this unit we only look at 100%, so wholly owned companies. So parts of what we did earlier in AASB 3 when we do a business acquisition apply as well. So looking at being able to, number one, prepare an acquisition analysis. Number two, your worksheet entries, which are your business combination valuation entries. So what are they? They are highlighting the fact that upon acquisition, sometimes the carrying amount and the fair value when you take over the company are different. If they are not in the books of the subsidiary already, then we account for them upon the acquisition. So we need to tax affect those as well. So that's what our worksheet entries, our business combination valuation entries are. Right, and we need to do that every year. It's just a worksheet. We're not doing any physical journal entries in the books of the company. It's a worksheet to be able to prepare. Right, then the third thing, so number one, acquisition analysis. Number two, your worksheet entries. Number three, your pre-acquisition entries. All right, your purpose of your pre-acquisition entry is to essentially zero out the equity, so that when you do the consolidation and you add your parent plus a subsidiary, you're only adding the assets and liabilities. You're not double dipping. All right, so you're zeroing out the equity and you are zeroing out your business combination valuation reserve account, so which includes your tax-affected differences between the carrying amount and the fair value, and then any goodwill. All right. So remember, when there is a gain on bargain purchase, that doesn't go into your business combination valuation reserve. It actually goes through your pre-acquisition entry of the parent, and then it gets transferred to your retained earnings in following years. All right, goes straight to the P&L. So it's a little bit different. So there's that's what we're doing today. In the tutorial, we'll do, you've had your homework questions, so you got 10.6 and 10.7, we'll go through them. One of them you've already had the answer to. I gave you the one that was a little bit more complicated. All right, so there's that, and we've also got the intra-group transactions as well. So you need to understand the intra-group transactions, but remember the focus in the exam is on your consolidations. So remember, from a theory point of view, your consolidations only arise when you have control. So you own more than 50%. There's three aspects there of control: power, rights to variable returns, and using that power to affect returns. So understanding that theory is important, because your next in later units you're going to look at non-controlling interest. So where you might have less than 50%, so determining whether consolidation is required or not. But for the purpose of this unit, you know that you do have to consolidate because it's 100%. All right, so keeping it easy for you. So your business combination valuation suspense account, remember, must be nil at the end, and don't forget to tax affect everything. All right, so as I said before, you've got your worksheet after your acquisition, you've got your worksheet entries, your pre-acquisition entries. Once you've done that, you need to do annual adjustments. For example, where you've got plant and equipment, where the fair value is more than the carrying amount, for example, you might need to account for the depreciation on that extra amount in later years. Right? So as you start moving through years, the first year you don't account for depreciation, but the second year when you're doing it, you've got 1 year's depreciation. Right, then the next one you've got another year's depreciation that relates to this year and one that relates to the previous year. That previous year one goes to retained earnings, all right, when you're doing your journal entries, because, remember, each year we have to recognise the fact that there's that difference. So we'll look at that a little bit more in the tutorial later. All right, so that's what we're doing. You need to adjust for depreciation and the tax effect. All right, when the fair value was greater than the carrying amount, and we have done a journal for it through our worksheet entries. All right, mostly there's no tax effect on goodwill. If there are asset adjustments, for example, if it's an asset, we end up with a deferred tax liability. If it is a liability, there is a deferred taxed asset. So just in your mind, where there is a deferred tax liability, it means you might have to pay more tax in the future. So something which could increase revenue, you pay more tax. Something which decreases revenue, you pay less tax, therefore it's an asset. All right. So goodwill is specifically excluded from tax. And this is your pre-acquisition. In your pre-acquisition entry, the control over the net assets and liabilities should be reflected on consolidation, and the equity should be eliminated to avoid double counting. So that's what your pre-acquisition entry does. All right, you'll see that we will debit the equity accounts and we credit your shares in the company A, B and C, or whatever. All right, there are potentially subsequent business combination valuation entries if land is sold, if goodwill is impaired, and what we need to do is we need to account for that. We need to adjust for the tax effect of the depreciation over its remaining useful life as well. All right, the other thing that we learned in Chapter 10, if there is pre-existing goodwill, we need to minus that out of your original acquisition. All right. If the acquisition is done on a cumulative dividend basis, right, we need to adjust that against the consideration transferred, because we're not going to pay them that money. All right, so if there is a cumulative dividend basis, we need to adjust that in terms of the consideration transferred. And remember, if there are dividends subsequently paid, that is an intragroup transaction. We need to adjust for those dividends that are paid. And if it's 100% owned, the full amount of the dividends that we have to adjust for. All right, so this is where it starts to get tricky when you do other units. When you start looking at non-controlling interest, you're only accounting for 50%, 60, 70 or whatever it is you own. Okay. All right, so this was an example in the lecture where I clearly showed you've got your balance sheet items, right? You've got the parent and the subsidiary. In the books of the subsidiary, you've got the carrying amount and the fair value. Where there are differences, we need to account for those differences. So, as you can see, there's another column there with this one here, that's showing which ones match each other with the journal entries. So all the ones go together, all the twos go together, all the threes go together. Okay, so you can see on the end here, for illustrative purposes, we've put in our business combination valuation reserve account, okay, which is our suspense account or a clearing account, to recognise the difference in the fair value. All right, tax affected. Right, so if you want to, you can follow that through as part of your worksheet, but you won't need to do that in the exam. All right, you're not doing that in the exam. In the exam, remember I've said right at the beginning, you're doing an acquisition analysis. You're going to do worksheet entries and pre-acquisition entries. You could have to do it at the beginning, or you could have to do it in the later years as well. All right, for more than 1 year. So make sure that you have a look at that. Now, Chapter 11 is specifically about your intragroup transactions and eliminations. All you have to remember with your intragroup eliminations is that you only include transactions with external parties. Anywhere that the company has transacted with itself, it's unrealised profit, right? When they're making those profits, they're paying tax on it as well, so you've got to account for the internal taxes. Right, so essentially what you have to do if you make an internal sale, you've got to do a journal entry to reverse it. All right, and when you're doing that over a number of years, if there's different parts, you might need to do some of those adjustments to retained earnings, all right, to eliminate unrealised profits, all right, which include revenue, potentially revenue, expenses and taxes, all right. So you need to, where you're, for the exam, not specifically for your intergroup transactions, but in general for consolidations, journal entries are required, not the full worksheet. But if you understand this worksheet and you can picture it, if you have to do any small intergroup transactions or anything, or you can picture your business combination valuation entries and what your consolidated accounts look like, that can help. All right, so, but you won't be required. Now your intergroup transactions, so we didn't get to do as much as this as I wanted to in the last lecture because we had quite a lot of other things to get through, but intergroup transactions could be a transfer of assets. So in the tutorial we'll do some extra examples of these. You know, if we internally sell a car, plant and equipment, dividends, so there's adjustments for dividend received, dividend paid, dividend revenue. Quite often there could be stock which is sold internally between parents and subsidiaries. There could be internal loans where you're paying maybe fees and interest, any other receivables or payables, okay, that might need to be adjusted for. So we'll just do one or two with this review from last week and then I'll get on with the assignment. So we're going to do this in the tutorial, so it's better to focus it on there where we can do a little bit of repetition, but we just do a couple. And then just to remind you what our adjusting entries are. And let me go pop them on. So the first one here, Number is the parent and Goanna is the subsidiary. On the 1st of July 2015, Numbat sold an item of plant costing $15,000 to Goanna for $18,000. So what we're showing is an overstatement there of $3,000, aren't we? All right, that's $3,000 worth of money that they haven't really earned. So NUMBAT had not charged any depreciation on the plant before the sale. Both entities depreciated the asset at 10% per annum on cost. All right, so there are a couple of ways of accounting for it, depending on what your line items are in your chart of accounts. So remember, in your zero, all your different line items that you've got, depending on how you do it. The first one is how most businesses will do it. All right, they will use a proceeds on sale of plant account. So what we need to do is we've recognised in the books of NUMBAT, because they sold it, they've recognised 18,000 in there, haven't they? It's in there as a credit. To get it out, we're going to have to debit it. So we debit the 18,000. The carrying amount of the assets sold is the original cost of 15,000, and then we're going to credit the asset account as well because it's sitting in there at 18,000 and we need it to be sitting in our books at 15. So what it means, when we get to the end with our group, we need that asset to be at original cost, which was 15,000. All right, so we eliminate that out. Alternatively, if you've got different accounts that you're using, you can eliminate the gain on sale of plant by 3,000 because you haven't made a gain, and adjust the asset because it's by the 3,000. And there's also the tax component there, which is your 30% of that 3,000, which is 900, because you've got revenue, right? You've made revenue. Part of that revenue has got a tax component to it, right? Too much is the 3,000, so 30% of that is what we have to adjust it by. Okay, so your depreciation is 10% on that 3,000, so we're overstating our depreciation, aren't we? Because it's in our books at a higher amount, so we have to adjust that depreciation when it goes through our books. All right, so that's that first one, that's the sale of an asset. Now, with this one, I've shown all the debits and, well, all the pluses and minuses. So in the books of the parent, you're showing the cash component there of 18,000 goanna. They paid for it, the 18,000. See, the books is currently, when you look at the P plus ES, the parent plus the subsidiary, it's overstated at 18,000. We need it to be 15. So the green column is what we need it to be. In order to get to that, those are the debits and credits that we have to do. All right, and then we need to adjust any depreciation on that moving forward. All right, so parent column is the financial books of the parent. Subsidiary column is the financial books of the subsidiary. All right, they are separate. All right, so what we do is we bring them together in the worksheet when we do our consolidation and do it this way. All right. So that's one. Now, we won't go through any more. We'll have a look at the rest of these in the tutorial. But what I will highlight here with this one for Part B is the fact that adjusting entries 2.5 years later, you will notice that one of the account codes there is retained earnings. All right, because the first year the transaction happens, if you've made revenue or an expense, that gets netted off to work out whether you've got a profit or a loss and goes through to retained earnings, doesn't it? All right, so we need to make sure that we follow that transaction through because we have to do these journal entries in the worksheet every year. It doesn't just go away, all right, because it's still overstated in the books of the parent. All right, we need it to be what the original transaction is because it's not with an external party. All right, you cannot make money from transacting with yourself. You can only make money with transacting with external parties. So this is why in later years, in the first year, the adjustments will go to the revenue and expense accounts, but in the next year, adjustments will go to retained earnings because those accounts have been closed off to retained earnings. All right. So again, I've got little worksheets there so you can see all the debits and credits, what it currently is showing if you added the parent to subsidiary and what we need it to be. So what we need it to be is the original transaction. All right. So I'll just flick through the rest of them and we'll have a look at them in the tutorial. And we've got some other ones to look at in the tutorial. All right, so in terms of the exam, we've all seen lots of that. Keep calm and good luck. You know what your questions are. You know what you have to study. You've got pretty good direction. All right, doesn't mean that you can leave it till the night before, because there's still a fair bit of work to do. Still a fair bit to get right. Make sure that between now and the exam, so you've got a couple of weeks that you plan everything accordingly for all your subjects. So depending on whether you're doing 1 unit, 2 units, 3 units or 4 units, make sure you allocate your time out properly and that you know exactly, what you need to do to get there, right? Don't leave it anything to the last minute. There's very few people in the world that can successfully do that. There are some which are really, really good and they're successful crammers, but most people aren't. All right, the majority of people, you need to take time to learn and memorise the main components of what you need to do. And if you've studied hard, there's no need to be nervous in the exam. All right, just go back to your notes, step by step, and you'll get there. Rachel? Yep, putting that, I'll put this up on Blackboard, yes. All right, so with your assignment, the overall average grade was 15. A little bit distorted because I had a couple that were quite good and got quite good marks, so nobody failed. All right, so nobody failed, but there were a few 12s and 13s. So I'm going to show you an example of a really good one that got a really good mark. I won't tell you what mark because I haven't released them yet, but let's say they got a good mark. All right, so they got bonuses and that. So some of the presentations were, in my opinion, just a little bit average, but most people that submitted, if it was a bit average, then you know that it was a little bit average. There were a couple that were really nice as well, so they did a good job and they made sure that they elevated it. The thing with this assignment is that it's really good practice for when you get out into the workforce, because you really do need to start presenting things nicely, paying attention to detail, trying to make sure that you don't have any spelling mistakes, that you don't include columns that you don't need, that you centre things properly on the page, all that kind of stuff. All right, so there's still quite a few groups that were not sort of the things that you might think are a little bit finicky and a little bit picky. It matters. All right, when you're dealing with a client, and this is what a lot of people forgot when they were writing their commentary for their executive summary, they were writing it like an answer to me, when you should have been writing it as though you're writing it for your client, right? So not me as a marker, me as you should have been writing as though I was the client. And some of the tone of the report, some of them were very sort of direct and very matter of fact, which you would never do that with a client, especially a new one, right? So when you've got a new client and you're not sure about what to do, you're more likely, you don't say, we will do this, 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 this and this. You're more likely to have it as a list of outstanding items that need clarification, right? And then you highlight and say, we'll arrange a meeting and we'll make sure that we discuss it further. So there was some things about things that the owner, for example, might not be too happy about if you recommended that the salaries of the managing director were too high. She's your boss, she's paying you, so why would you say that? All right. Instead of saying that, you would say, perhaps, let's have a review of payroll. Now, if you're going to sell the business, then obviously the advice that you would give your client is that in those books, you're not going to be showing payments, as many payments coming out like that in your salary expense. All right. But that was one which I laughed and I thought, geez, I don't know if I'd be too happy about employing them again if they don't want me to get paid so much when it's my business and I put all the capital into it and I've got really good cash flow and I can afford it, so I'm going to pay myself. That's one thing that small businesses quite often don't do very well either. Sometimes they don't pay themselves enough, right? And they end up, doing it hard when maybe they didn't really need to. So, and they keep living like paupers. Even when they start doing well. So when you start off, sometimes it's good to be conservative in that. Okay. Some people maybe didn't have a cover page numbers, formatting and things like that. So I will show you an exemplar answer here in the class. If you want to see it in person, I'll print it out, but you have to come to my office. The reason I'm not putting an exemplar answer for this semester on Blackboard is because in previous semesters, when I've done that, so I haven't done it for a couple, they have sold my answers to cheap websites, so people have made money from it. So I'm not putting up an exemplar answer. I will show you in a sec what it looks like. And if you want to see it, you've got to come and see me. All right, so I can definitely do that. And I will put up an answer to a different one, just for visual purposes, so you can see what other people have done in terms of their assignments and making sure that they do it at the level that you need to be presenting at. So and online students, they can email me for stuff. So online as well, I'll release the rubric. There's quite a lot of feedback as well. So where you've done good things and where you could have improved. And one thing that one student did which was actually quite good, it was only one group that did it, is when they did a comparison, they did it based on an average for the existing data. So they assumed you've got 11 months, divided it by 11 and compared the July to the average of the other 11 months, and that was actually a pretty good comparison with the data that you had, because you didn't really have proper comparative data. So there was another group that did that as part of their commentary, and I thought that was quite good. Some people just in their analysis, they didn't really do a good analysis. They just restated the question. And then said, this is the profit they made, this is their assets, this is their liabilities, and that was it. They didn't really go into and give me anything extra with that. I would have liked to have had a little bit extra. Calculations, so a lot of the calculations were not hard, right? There's some obvious errors that I've picked up in assignments and I've commented accordingly. Where some people had a little bit of trouble with zero, they didn't balance from the start, maybe their GST wasn't quite right, they missed a couple of GST, so there's a little bit of leeway there with the calculations. So as long as you did the bulk of them, you know, most people got a lot of their accrual adjustments and they are correct and did some of their processing. Few people got payments, your invoicing wrong. So a few people got the accounts payable wrong and the accounts receivable wrong. They might have just forgotten one transaction or forgot to do the credit note or adjust for that credit note. A few people didn't include GST on some of the asset items that they should have fixed, but they didn't. But not to worry, it's not the end of the world, it's only a little bit, so there's not a lot of marks attached to that kind of thing, but some people that went the extra mile maybe got a little bit extra. Presentation was king. Right, and that's the main thing that I really wanted the students to get out of it. And I did say it enough times that becoming a good novice user of Xero, being able to run a report, being able to edit that report, being able to put it into a format and present it to a client, and to really think about what you're going to have to be doing out in the real world. Because if you can't find a job with someone else, you're going to have to create a business for yourself, right? And it's not that hard, all right? It's, and sometimes it's a good thing once you've had a little bit of experience to start your own business. If you want to be independent, you want to run the books of some smaller businesses, and you can make a nice living doing that, right? I mean, maybe you're not going to become a billionaire, all right, but you can be comfortable doing that kind of thing. And if you're going to have clients, things like that, you need to learn how to communicate properly, and and it happens all the time, you might not have information. So you've got to do the best you can with what you've got. Okay, so potential bonus marks were attached to things like the really good presentation, where it was obvious that people put in the extra effort. Maybe if you added a covering letter, I don't think anyone did it this semester. If you added an invoice, for example, not putting the dollar amount in, some people did. Some people added the debt that they owed Frogmore. But you don't really do that. It's not really appropriate because the client hasn't approved it yet. They haven't said they're going to give you the money. So if you add a covering letter and a copy of the invoice for the finished product, but it wasn't really a finished product either, was it? Because there were still items outstanding. But there was opportunity for extra work. There was no bonus for adding in the tax, but if you added in a note regarding the tax and potential, that you can do potential work for them in regards to tax. GST needed reconciling as well, definitely needed reconciling. If you did a basic rec, when you look at the revenue and the expenses, and you looked at the amount of GST that was there, it didn't quite reconcile. So there was also GST that needed validation in regards to the fixed assets, right? That needed to be checked because it may have, there are different opportunities with regards to fixed assets for GST, which is a whole other lecture, right? Because the business may not be taking full advantage of the input tax credits that you get. Also for rent, all right, whether GST was on rent or not, didn't matter whether you had it in there or not, but it was still open to question that you might not be getting the advantage that you could have been getting if the company was registered for GST, and if the lease providers for your rental premises are registered for GST and there was GST in the amount, you can claim that. All right, so quite often it doesn't, it's not applicable, but sometimes it is. All right, so you didn't necessarily, need to do anything with that, but if you recognised a few other items, it was really just if you recognised that there was quite obviously some issues with GST. All right, and a basic little rec would have shown that the money you should have collected versus the money that you paid didn't quite reconcile with what was in the account. All right, and there could have been a nice easy reason for that, but still needed to, that was a point to be followed up. Also, you could have, the depreciation, you could have included it at the beginning or the end, either way, and you could have decided to put in the impact of the GST at the beginning, or not, right, for the pre-existing assets. All right, so either way, you could have done it, but it was still an item for follow-up. Making sure that you included the GST on the office and the spa supplies as well, so not everybody got that. So let's just have a quick look at a nice assignment. All right, so we have two of the people who did this assignment here, Nathan and Franco in the group. So as we can see, we've got a nice cover page here. They've branded it as well, Frogmore Accounting Services. A lot of people didn't do that, didn't do a cover page. You didn't brand yourself. When you're in business, you need to brand yourself. All right, so the company was Frogmore Accounting Services. Nice contents page. Notice we've got page numbers there. Everything's nice, presented nicely with a colour scheme, blue all the way through, all nice and neat. Clear what you've got, what your appendices are. Some people just had appendices and they had Appendix 1, Appendix 2, Appendix 3, but didn't label them. Right, nice if you've got a contents page that you know exactly what the items are that are in your appendix. They've got some key assumptions and corrections that they did in their appendix at the back, and they did include an invoice. So we've got a bit of a summary highlighting what they're going to do. Rather than restate the question. So that's where some people got it wrong. They just restated the question, where the whole purpose of this was to address those 4 items that was on the page 2 of the assignment in terms of processing the accounts and then looking at performance and moving forward, what might some of the recommendations be. All right, so they gave some bit of discussion about financial position, receivables, some items outstanding, mentioned about inventory, maybe adopting perpetual inventory system. One thing that not many people did in terms of talking about inventory, I know I mentioned it a couple of times, I thought I would have seen it, was actually talking about the main advantage of perpetual inventory is that you can really see stock losses, right, quite quickly. So not just what's selling and what's not selling, which is really important, right, but you can actually see if people are walking out the shop with stuff, because you can do a pretty easy visual check when you're running a business and you've got a small business and you've got a certain amount of things, because you do, when you're the owner, you know what you've got. You know whether there should be 10 things on the shelf or 20, And if there's a few missing, you go and do a little bit of a check. You pick up on those kinds of things quite quickly. And the perpetual system helps you with that. And yeah, so here we go, nicely, all the reports all nicely presented. Trying to get them on one page as much as possible. All right, it's not always possible. So nice even columns and rows, where there are a few assignments out there where the row sizes and the column widths and that really weren't balanced at all on the page, centred nicely on the page. All right, your P&L, okay, as well, and your balance sheet. This one here, we can see we've got notes attached to it where they've tried to put it in compliance with AASB 101, and then they've attached notes to show what makes up the different amounts. So I've got a few notes there. All right, so you can see how nicely they've put it all together. All right, so that's just to give you an idea that this is what you need to be doing. And remember, when you're in industry, this is what you do every day, every single day. All right, we're looking at that, and the little things do matter. Okay, so a lot of people gave me the wrong report as well. So I specifically asked for the detailed transaction report. Those people who attended the labs, I showed you that report. It wasn't the account transaction, it's called the detailed account transaction report. And the reason that I wanted this one specifically was it was a little bit shorter than the the accounting transactions that showed each, separated your accounts receivable, accounts payable and that. This one clearly showed whether you include GST or not. So I'm able to clearly see whether that's there, whereas with the other one, you've got to go through every little thing separately, and that was like 30 pages long. And this one's a lot more summarised version attached to that. So it was difficult to get it on one page too. So, but you make an effort, and guess what? Voila, it's there. Okay, reasonably nice and neat, reasonably well sorted as well. Okay, and so the students that didn't give me that one, if they gave me one of the other ones, they did lose some marks, all right, because they didn't follow instruction. Right, were a couple of students who uploaded nothing to Blackboard as well. So not many, just a few. They didn't upload. Remember, I asked everyone to upload the cover sheet or a page. I just suggested the cover sheet because of the signature, because I can't attach the rubric to nothing. If there's nothing there, you have to see it. So all they will get is just a grade. So if they got, 15 out of 20, that's all they'll get. They don't get all the feedback. They'll have to go back to their group member who uploaded the assignment. Okay, so hopefully that gives you an idea to how to benchmark your own submission and the grade that you've got. And as I said before, I'm not going to put this one up. If you want to see this one in detail, I'll print it out and you can come and have a look at my office. But I will put up a different one on Blackboard, which is of a similar quality, which has got all that kind of stuff. All right, just to give you an idea. So it won't be about the figures, it's just about presentation. All right, so now it is 4:15. So we've got anyone got any questions for me for the last bit? I've given you lots of tips, so you don't have to stress with the exam. All you have to do is practice and you'll be fine. The difficulty in this exam is making sure that you monitor the clock, that you know exactly how much time you're spending on the questions, and that where necessary, you just got to move on to the next one. All right, you really have to monitor yourself in the exam, otherwise the time will get away, because 2 hours and 10 minutes is not long. So I've tried to highlight when you're in the tutorial, when we're doing some questions about how long it's taking you. It doesn't matter in the tutorial, it's fine. If you haven't done your homework, it's going to take you a little bit longer. But that's just to give you an idea that you need to make sure that you get yourself to the level where you know that you can attempt a question like Kongzi, for example. If you can do that in an hour, you're doing really, really well. It's a bit more, Kongzi's a little bit more difficult than the one that's in the exam, but remember, under exam conditions, you're a little bit stressed in that anyway. All right, so you'll definitely use the full 2 hours in the exam, so please make sure that you watch the clock and that you've pre-worked out, that you've worked out how you're going to approach the exam pretty early. All right? Okay, that's it. That's it.
Just quickly, is this revision lecture available on platform?
It will be.
Okay.
I'm going to go and upload it now.
Okay.
All right. So that's it. Yeah, I do want the manuals back. So if any of you have got the manuals, I'll have them or bring them back up to my office. Yes, and anyone else who's listening to the iLecture, yes, please, I would like the manuals back. Better if you take them to my office, so then I don't have to carry them all, but I'll take the couple. I've got an injury, so I can't carry huge amounts of things. Yes, that's fine. But yes, so pop them in my mailbox, it's easier. All right, just keep working them all in there. I've got to get a few back, so I don't want to have to print them out again for the next class. All right, okay, so that's it. So some of you I will see tonight in the tutorial, and for the rest of you, it's been nice teaching you for the semester. I hope you've enjoyed the semester, and I'll see you at the exam. And good luck. But remember, it's not about luck, it's about hard work. All right? See you later.